Welcome to this webinar. This is the last one we're doing this year, and we thought it was a good check-in for people to see where they're at in terms of reflecting on the year we've just had and planning for next year. I think it's clear for everyone, for all of us, 2020 has not been at all what we expected, but the fact we're at this point, what we can do is make sure we're on the best foot forward for next year. To me, that's all about planning and getting ready for what we can achieve in 2021. So hopefully you're here to kind of get some tips and some advice on how you can get the most out of planning into next year, and helping put your business in the best position to do that. We've got, just so you know, my name's Rob Bowl. So for those of you that know me, great. If you don't know me, I've got two things I focus on at the moment. I'm CEO of International Leaders UK, which is we're jointly kind of running this presentation with, and I'm also founder of Evoke. So I wear a couple of hats across those two businesses. Ultimately, my goal is to help support SME companies succeed, improve their chances of surviving and succeeding in what they're doing. So that's me. We've also got Robert Green, my colleague at Evoke, who's a very experienced finance director, having worked for probably more decades than I should really say on his behalf, in multiple sectors, different types of market conditions, lots of experience of handling and planning forward. So you're going to hear from him as well later. What I've wanted to do is just emphasize this is an hour to spend working on your business, and I would encourage everyone on this to avoid other distractions. I know it's very easy on Zoom to have distractions and things flash up that get our attention, or emails to look at, but I always describe working on the business as the most valuable time that you spend on your business. This is about helping to build your business asset, and I describe working on the business like this as being your kind of £1,000 an hour value. So an hour purely focused here is your £1,000 of value adding to your business. So I'd encourage you just to try and avoid other distractions. There is going to be opportunity for some interaction in this, so it's worth just making sure you've got time for that. So I've just done a brief intro. You're then going to hear from Robert Green talking about the 10 tips to what we've called Vaccinate Your Business. We're then going to have an opportunity for a breakout discussion. So there's going to be some small group breakouts with a facilitator to help just get some conversation going around the 10 tips that we've shared. And then at the end, I'm going to wrap up and talk about some next steps that I believe would be useful. Just to kick off and get some people in, thinking, I just wanted to ask a couple of questions. So I've got a polling question that everyone should see, which is basically saying, what level of growth are you expecting over the next 12 months? This is for your business. So you should have a pop-up to ask a question. It'd be great for you to just click and yeah, just give your feedback there. I'll just give a couple more seconds there. Awesome. So I'll just end that. So that's great. So I've got 86% of the group looking for growth next year, which is fantastic. I think that's a great positive position to start this with. Question number 2 that I'm just going to put up. And this is, have you visualized where you ideally want your business to be by the end of 2021? The reason I specifically mention this in terms of visualization is if you're looking to achieve goals over the next year, being able to visualize what that looks like is the first step. So just having a look to see how people are responding to this. Great, so I was going to end that poll there. So 91% have visualized that, which is great. That's fantastic. A couple that haven't, so it'd be good to find out why you haven't visualized that. And then final question, I'm just going to launch now. So do you have a business plan for the next 12 months? So full plan, part plan, no plan. Excellent. So just end that. So what's quite interesting there, everyone's looking for growth next year, like 96%. 90% have visualized what that looks like, but only 24% of you actually have a plan for that, which is quite interesting. So you're in the right place for this, because that's what we're going to talk about, is those tips to getting that plan in place. So thanks for sharing and answering those questions. I'm now going to pass over to my colleague Robert Green. As I said, experienced finance director. He's going to take us through the next few slides and the 10 steps that we've talked about. So Robert, over to you.
Thanks, Rob. Can I have the next slide, please? So good morning, everybody. I hope you're all well. And despite Rob hinting, I'm not yet eligible for the vaccination before Christmas. Got a couple more years before I hit the big 8-0. But it's clear there are signs. There's light at the end of the tunnel. So there will be recovery next year. That of which I'm confident. It's just knowing exactly how soon it will start. So what I'm going to do this morning is try and take you through 10 things by way of a health check, almost. We've used the phrase vaccination. So I'm going to help you check your vital signs and reduce the worry factor that you as business owners are probably causing you sleepless nights. I'm going to give you some tips on how to conduct health checks on your staff, on your systems, and all the various stakeholders, both internal and external, to your business, and make sure that you're aware of the health of your bank balance and how you can make positive changes to the working capital. And look on a more recovery thing. Look at some getting some new blood. Either new ways to existing markets or ways into new markets. So let's kick off. Next slide, please.
Well, Robert, sorry, just to add to that for everyone, I would encourage you, if you've got a bit of paper in front of you, just to write down the 10 numbers. And as we go through this, we're going to discuss actionable steps. So actually everyone's got 10 takeaways from this. So if you've got a bit of paper, noting down 1 to 10 would be a useful thing to do.
So we start off, number 1, your own self-assessment health check. And as Rob alluded to, the importance of updating your business plan. So often business plans prepared for a particular purpose. It may be raising investment or securing loans. And once that's achieved, they're chucked back in the bottom drawer. There shouldn't be. There should be a living document that should be shared with all your key stakeholders, getting their buy-in. And everything you should do should be related to the objectives contained within that business plan. So you need to look and repeat the SWOT analysis, and I'll show you an example of one soon. You should consider whether your business is pivoting to provide new products or services to your existing customers. Evaluate the state of your historic current markets. And do research on the new emerging markets. And as another recurring theme, keep up your awareness of your competitors. People are failing, people are buying new businesses. The market is constantly changing as we go through the pandemic. So you've got to keep up the level of your awareness. Next slide, please. So throughout this, I'm going to show you some examples of tools that we use. I'll try not to labour them too quickly and just bring out some salient points. So SWOT analysis, and goes without saying what those initials stand for, but some things I'd just like to pull out that need to be considered under each one that will be recurring themes. The strengths, assess your internal resources. That's not just cash, your stock, customer base, but it can be your staff. It can be the tangible assets, it can be the intangible assets, your IP, for example. As I say, be aware of your competitors. What are they doing better than you? Are they quicker to react? Are they more nimble on their feet? Have they pivoted their business in order to attract more new sales? Look at those opportunities. Some opportunities that you previously identified may be closed, and almost certainly new opportunities have been opened up. The threats are going to be competitors emerging from this stronger than you are. The changing regulatory environment, I'm going to mention Brexit and then shut up. And be aware of all the press coverage in your sector. If it's got negative coverage, think about how you stand out as an individual doing better than the rest of people in your sector. Next slide, please. Right, so the main thing here is to re-evaluate your business objectives. That's your action on this slide, and I'll be referring back to the business objectives throughout the rest of the presentation.
So yeah, so as Robert said, for each one of these steps, I would suggest people note down what is an actionable step around this point. So reevaluate your business objectives. What's the one thing you could go away? And I'd be thinking, you know, we've got a couple of weeks off, downtime over Christmas. We want to have some downtime, not working. But this kind of thing should be on your mind in the background. I think any entrepreneur, anyone running a business never fully switches off. But this is the time, just think, what are you going to do? So when you come back in January, you're going to be ready, having done a bit of a self-assessment of the business with these things. So I just note something down. The other thing I would suggest, out of 10, 1 to 10, on what scale do you think you've nailed assessing yourself and the business in the form of your business objectives? So you can put a score against it as well. And then we can move on to the next point, Robert.
Yep. Right, so any health checker needs to check your vital signs. So in a business, they are your key performance indicators, the key drivers that drive both profit and cash. You need to identify them, you need to prioritize them, and you need to find good ways of measuring them accurately. And once you've got that and you're reporting on them, these reports need to be clear, they need to be timely, and they need to be understandable and related to your objectives in your business plan. And one very good tool for that is a trend analysis by using the behavior over time graphs. So just quickly flick through some examples, some tools that we use here in Evoke. Here is an overall summary of a dashboard. Right? So this dashboard covers all the aspects of sales, of margin, of overheads and profit. Right? It's quite busy and you'll already see the advantage of doing graphs over great tables of figures. Next slide, please. So here's an example of behavior over time. I've taken sales, I've taken gross margin, I've taken overheads. I've shown both the monthly totals, the rolling 12 months, because that's important if your business is seasonal. Regardless of where you are in your financial year, you need to be looking back 12 months and comparing that with the previous 12 months. I've expressed the margin in terms of percentage rather than lump sum gross profits, and I've done exactly the same with the overheads as a percentage. So if you're making, in this instance, 39% gross margin, you can see that 24% of that in Q1 has gone in overheads. And once again, the graphs are clearer than the figures. Next graph, next slide, please. But you put those together, the key drivers, and you end up with your profit. And one of the clear indications to make it clear to non-financial people, in this instance, we've got a profit that grows from 60 to 80,000, right? A positive variance of 20. And you can see summarized in a simple block that there was a very little, it's actually a downward trend in sales, but because the margin went up, it created 10,000, and because the overheads went down, that created 10,000 more profit. Next slide, please. Right. So we're looking at small incremental changes. This is the key thing. If you are able, you focus on increasing your gross profit. There are different ways of doing it. You can simply increase volume, you can increase price, you can increase selling more to the existing customers you've got. You can increase your price without affecting your existing customers if you produce a general tariff and then give quantity discounts to your best customers so that they can see their prices. But it may just be simple as just rounding your prices up slightly. It won't make a great deal of difference to whether your customers buy from you, but those small incremental changes can dramatically change or improve your gross profit. And in order overall increasing your operating profit, then there's the reducing your overheads, finding cheaper alternatives for everything you buy, and lower interest rates, although in these current times it's difficult to actually borrow less. Next slide. Other drivers of cash can be the money you tie up in stock, that is goods on shelves. It may be you want to reduce that, or it may be you want to consider actually putting some stock into your business to give you a buffer on any supply delays that may result of the difficulties that your suppliers are facing in meeting your demands. The other two main things that as an FD I always bang on about are the amount of time it takes for your customers to pay your invoices, and how long you're able to extract before you pay your suppliers' invoices. And again, small incremental changes in these can have a big combined effect. Next slide, please. Right. I've talked about incremental changes, how I would measure it. This is just a very quick way of laying out the effect of 1% change, always a positive change. So the overheads is a positive reduction of 1%. So you can prioritize. In this business, although they made a profit, they got a negative cash flow. And we were able to quantify what the effect, the monetary effect of a 1% change in each of these main drivers. And overall, as you can see, if they were able to achieve just those ones, their net cash flow would go from minus nearly 200,000 to neutral. And again, it would suggest that another 2 days added on, reduced on your receivables would level out that cash flow while still maintaining a profit. Next slide, please. Right, this is just an example of the elapsed time between when you take in goods, you pay for them, you eventually sell them, how long are they sat on your shelf unsold, and 200 days in this actual example it took before you received the cash from your customer. By bringing that 200 days, which seems extraordinary, down to 180, this business had a positive cash impact of £186,000. Thank you. Next slide. So your call to action on this one is to have identify your KPIs, make sure you're reporting on them promptly, because otherwise, how else would you know that you'd had a good week or a month, depending how volatile your business is?
Just to add to that, Robert's spoken a lot about financial KPIs there. I think one of the key things here is to think about all the KPIs, financial and non-financial, and if you're struggling to identify them, that's definitely something that we can talk about in the breakout discussion later. But your main action here, how do you know that you've had a good week, a good day, a good month? Those are your KPIs. How can you actually judge that you're actually having a good day, good week, good month? And we'll move on to the next one.
Next slide, just please. Right, so we talked about worry of being a business owner. We need to reduce the amount of worry caused by uncertainty by simply not knowing what's around the corner. I'm sure you've all got 90-day cash flows now in place, which are an absolute essential when the pandemic first started. But what you need to have is rolling projections of both profit on cash, using clear and flexible assumptions that are known to the senior managers within your business. And the result of that is you will know both the direction and the speed of how your business is traveling. So I'll run you through some quick examples, please. But you have a 5-year plan. Now, nobody can predict 5 years ahead, but at least you've got a clear indication of what you want to achieve, what your objectives, if you meet and achieve all your objectives, what does that mean in financial terms? Yes, a simple summary, and yes, supported by behavior over time graphs, as you can see. You can see sales is modestly increasing, margin is increasing significantly greater, overheads are pretty much the same, and yet the effect on incremental profit each year is quite dramatic. Again, an illustration of small incremental changes combining to have a good positive effect. Next slide, please. So as a finance director, I'd be looking constantly to put together what's called a 3-way forecast. So you have profit, you have balance sheet. Next slide, please. And underneath that, you have the all-important cash flow statement and a reminder at the top of the assumptions that are being used throughout that you can then reevaluate and adjust as necessary. Next slide, please. Right. So the key call to action: have a projection always there of the next 3 years profit and cash. Okay, next slide. Right, I'm going to move off the balance sheet for now to things that are non-financial. You need to do a health check on your own staff, right? Through the advent of furlough and probably necessary redundancies, hopefully you've retained the best ones, right? They probably have an element of home working, which initially would have been just a temporary basis. But now more often the trend is to keep people working at home, maybe for part of the week, and only coming in and interacting with their teams maybe once or twice a week. Make sure they're safe, make sure they're well resourced and therefore well motivated. And what you must do is constantly review the methods of communication. When you can't have regular day-to-day contact face-to-face, then you must ensure that your methods are working and get regular feedback to ensure that you've got full employee engagement. And I would encourage everybody to resume staff training using the online resources that are a very cost-effective way. If we go to the slides, right. One interesting thing, so there are a number of tools now being made available, some tech, where you can monitor the well-being of your staff. But there is a trend identified in this survey of global CEOs, where 2/3 of them actually predict that within 5 years, pay will not be the main criteria for job satisfaction. The skilled people in your staff will focus more on the company's culture and its values. So if we move to the next slide with that in mind, there are some very cost-effective tools, some apps that are on phones where you can send out questionnaires to your staff. They can answer them quickly using an app on their phone, and you can monitor their reaction to their values, to the style of management, all sorts of things. And you can repeat these same questionnaires periodically to ensure that the actions that you're taking are actually having a positive effect on your staff's engagement. Next slide, please. So the call to action: have a plan to create a skilled and engaged workforce, and it's that engagement that's the important thing. Next slide, please. Right, IT, right, virus-free, picking up the trend. We all have virus protection, but do you have protection from cyber attack? I don't know what happened with Google on Monday, but I suspect it was probably a hostile attack from outside. So be sure your IT that you rely on is safe, and ask yourself, because you may have had it for a number of years, can it still provide you with the timely and relevant data that you're going to need in order to monitor your KPIs? And there's a chance to look now, as you may have reduced your workforce, with increased automation. Now AI is the hot topic. You can get things that can do a lot, achieve a lot more, a lot quicker, with less manual intervention. So the call to action on this, next slide please, is to ensure that your IT systems are both safe, they're relevant to you measuring your achievements of your objectives, and they are efficient. Next slide. Right. It's important, as I say in the SWOT analysis, to look at your customers. The lifeblood of your business is your customers. You need to know whether, if you've pivoted your products or services in any way, that you are meeting all their requirements, and their requirements may have evolved, especially if they in turn have pivoted. You need to monitor their own health, their financial strength, and their credit health score. A customer is no good to you if they can't pay their bills, right? And you need to ensure that your contracts with them are current, are relevant to the level of business. So often contracts are put in the drawers and left for 4 or 5 years and are no longer relevant to how the business has evolved, and that they provide you with sufficient protection so that you're able to remind people of the T's and C's and the penalties for late payments. Be also aware of your competitors merging in consolidation. There are going to be a lot of businesses, as I constantly say, being acquired by other businesses in the same field. That may have an impact on you because if a bigger customer, a bigger business swallows up your customer, they may have already in place an alternative supplier doing what you're doing. So keep in touch with what's happening with your customers. Looking at the product, this is a simple analysis down the side of your main customers, running across the top of your main products. And by this simple analysis, you can identify the shaded bits, it may be pink, it may be yellow on your screen, where there are gaps. So you've got established customers not buying everything that's in your product portfolio. That suggests where you can get some quick wins by making those companies aware of products that may be new, that you're almost certainly gonna want. Move on, please. Right. So the call to action is conduct a complete review of your customers and an audit of their health and what they're buying. Next slide.
So just to add to that, I think we've got to point 6 now. So ideally, you've got 6 action points from these things that we've talked about, and it'd be great to have a grading of where you think you're at. Scale of 1 to 10. 10, fantastic, you're all over it. 1, clearly you've got a lot of work to do. But the idea here is just to give yourself a simple assessment of where you might need to prioritize some of your attention. And what Robert just showed there is an overview of your client and product service matrix, or the mix, is a great way of looking at it, and something that's an extract from a bit of software we use to quickly identify where opportunities are being missed and help plan forward to recover those gaps. So we'll move on to point 7, Robert.
Yeah. So now the world's changing, and you need to be light on your feet in order to be able to react. And so we're now talking about new markets where we can find new customers or new ways of servicing your existing requirements. So you could penetrate new markets, and that's likely to be further away, out of Europe, I would suggest. By using an agent that is familiar with the local customs, the way of doing business, and the legal, financial, tax implications of trading with new countries. You need to find new ways of attracting new customers. The salesman going around the houses and knocking on doors, I would suggest, is a thing of the past. So you need to be doing some distance selling. Your website needs to be very dynamic, and really sell your customer with the use of video, all sorts of tech, to give your customer that's looking at your potential customer looking at you from a distance a really good feeling of what it is you'll do and what are your values. And then when you've got a customer on board, make it easy for them. Use tech to enable them to do their own reordering through a portal. That will take out any delays, it will take out the administrative burden, and more importantly, it will give them an indication of what stock you've got in your business at the moment and how quickly you can fulfill that order. So the action on that is to go out, find new businesses, and at the same way, find new ways of doing business with your existing customers. Right, flipping that customer audit to your suppliers, you have the opportunity to achieve small incremental changes on your gross margin by renegotiating your terms, your prices, quantity discounts, extra days credit, whatever that may be. And you've got to be aware of the alternative suppliers from these emerging markets. In a similar way, as your competitors will be looking for alternatives to you, you've got to be looking for alternatives through suppliers. Be aware of the volatility of lead times. sorry, I'm mentioning Brexit for the second and final times, but I think we're all aware of the implications of running out of stock and not being able to fulfill your customer orders. And again, as I mentioned with customers, be aware of the contraction, that there will be changes to your suppliers. They could be acquired by another business, they could fail, or may I suggest there's an opportunity for you to acquire them if you're cash rich and they're very dependent on your business. Again, another quick tool, another report that we use. Please, Rob. This one won't go into the detail, but it's taking the top 10 suppliers. It's expressing how much you spend, how reliant you are on them. In this instance, it's the warning signs there is that the top customer, it equates for 32% of your total spend. You are extremely vulnerable if that company fails. So you knowing that, you would look to spread your risk across companies that you know are financially secure. But this is all the kind of analysis you should have at your fingertips to make this audit possible. Third call to action, similar to the customers, do a review and an audit on all your key suppliers. Next slide, please. Nearly there. Are your costs overweight? This is obviously a favourite one for accountants, but you need to have identified which ones are the fixed costs and which ones are the variable ones. The variable ones you can do something with fairly quickly. The fixed costs, such as rents, you need to take a longer term view and find ways of getting out of long-term fixed agreements. And you need to decide also on the difference between what's an essential cost and what's a desirable. When things are tight, you need to get down to just spending money on the essential things. The desirable ones can wait until your profit levels have been restored. And I keep banging on, are you always getting competitive quotes for everything you buy? A quick example of another bit of analysis tool that we've got on the next slide, please, Rob. Yeah, so we can see there, again, I'm using graphs, behavior over time. What's the level of spend in your overheads expressed as a percentage of your sales? How is that moving? What are the big costs and what are the small costs? Because even small changes on lots of minor costs can add up to an overall saving. Thanks. Next slide. So please, I encourage you to conduct an audit of all your major expenses. And the last one, number 10, know your bank balance's health. But this isn't just about your cash balance and the forecast, but what's behind it. I'm sure you will have taken the opportunity to look at refinancing any existing loans and explored the alternative methods of finance. But they go beyond the government initiatives. A good source of information is the British Business Bank, whose profile has been raised by the government as they administer the government schemes. But I would encourage you to look at that website, understand the providers that have come on board and the different products. A quick summary on the next sheet, please. Hopefully you'll know all about CBILS, and remember, you can get a top-up CBILS loan, but please hurry, because at the moment that will expire at the end of January. The CBILS loan, there's the Future Fund for those of you who have startup. I'm sure you must be aware of it. Things you might not be aware of: invoice factoring, which is simply your invoice to another body and they will collect it, but they will buy your debt at a discount. But invoice finance is a way of making that kind of level of finance visible to your customers. So people will lend you money on the back of the value of your sales ledger. Technical things, letters of credit. Look at all these alternatives. There may be assets in your business that you've fully paid off. There isn't a loan to reschedule, but you could get refinanced. And you can always sell something like your building and lease it back and get a cash injection. Next slide. Right, so review your current borrowing and your future requirement based on your 3-5 year plan, in order that you have the internal resources to achieve the objectives that you've set in your business plan. Thank you.
Excellent, thank you, Robert. So that's the last of those 10. So these are just a simple recap on a slide there. I hope everyone's managed to identify under each one of those 10 points something that they could potentially look at, go in action, and if nothing else, have an assessment of where you think you are on that scale of 1 to 10 for each of those points. What we're going to do now, because I think often getting ideas around this or actually judging where you are always helps having some conversation with other people that are either in the same position or someone with experience, like one of our team at Evoke. So what we're going to do now is we're going to have 15 minutes in a breakout room where we're going to just randomly split people up into a facilitated room, where you have an opportunity to talk about the things that you've picked up from those 10 points, and just assess yourself where you think you're at and what you need to go away and look at in terms of takeaways. So I would suggest if you join the breakout room, take yourself off so people can see you, turn your camera on so you can have a chat, and we'll open up those breakout rooms now. We're just waiting for everyone else to come back in.
Hey, we're only just getting started. Just getting into it then.
15 minutes always goes quickly.
Yeah, right. Welcome back, everyone. If I could just ask that everyone to put themselves back on mute, that'd be great. And just by a show of hands or nodding your heads, thumbs up. Has everyone had some useful conversations there? Has that been great? Does anyone want to be brave and share anything that they took away from those 10 points in the discussion? It'd be good to get someone to share something. Liz, do you want to share something hopefully useful?
Well, the thing that came out of our discussion is sort of the 5-year plan versus the next 5 minutes, really, because at the moment it's changing from minute to minute, and that it's not about having a plan, it's about having 5 plans. So it's the plan for if this happens, the plan for if that happens, the plan for if the 3rd thing happens, the plan for if the 4th thing happens, and the plan for the other thing that's going to happen. So anyone that has one plan, I think, is on dangerous ground. That's kind of what we established.
Well, I think I like this description of having a strategy. A strategy is just a series of small plans, and I think if you then put those plans together, well, that is your business strategy. But I think over this year, I think a lot of people have really been firefighting the whole time, and as things quieten down at the end of the year, I think it's super important to look further ahead and start at least imagining and planning for what the business could look like over the next 12 months and beyond, and then hopefully some of those things will actually fall into place. Does anyone else want to share anything that they took away from that?
Yeah, hi, Bob. Can I just add something there?
Yeah, sure, Brett.
Yeah, okay. One of the things that I think that is important that businesses shouldn't overlook with the planning is actually opportunism. I remember I was at a seminar once with Tim Schmidt, who started the Eden Project, and he said that one of the things with businesses, obviously in an uncertain climate, is that you need to be like eagles, sort of soaring high above the landscape. When you see an opportunity, be really, really good and focused at getting it. So I think when people are trying to build business plans, one of the things to do is to build enough flexibility in there to ensure that you can capture opportunism, because obviously we don't know what's going to happen, but what we do know is it will create opportunities. There will be companies changing, lots of different opportunities there. So I think that's something to stress, that over planning can sometimes mean that you don't realize opportunities. So plan for opportunism.
Great, thanks, Brett. I think that's a really good point. And we actually did a webinar probably a month and a half ago, which was actually talking about taking those ideas, those opportunities, and actually doing something about them, because I think there's been so many great ideas over the last 9 months. A lot of people have actually struggled to actually turn them into something that delivers. So there's actually a great piece that one of my colleagues, Stephen Reed, did on that. And I think that's part of the business owner's role is to actually be outward looking for those opportunities, and it's doing that £1,000 an hour type of work, which you have to fit into your day, you have to fit into your week and your schedule to make sure it happens. We've got a couple of minutes to wrap up, and I appreciate people sharing what they have done. I'm just going to push on just to say that some people might be well ahead with their planning. for next year. Other people might be thinking, what do I do next? Or have I got this right? Well, I just want to give a brief summary of how we can help with that. And we'd love to have a follow-up conversation with you if you feel it'd be worthwhile. So at Evoke, we're a team of experienced finance and commercial directors. We work with you on a part-time basis to provide you with the best experience and tools to help you with financial health, planning and controls, looking at your operations and people, business performance advice, and then looking at anything around business exit and succession planning. And there's a whole lot more around that. You know, from getting in the best place from a financial position, access to funding, access to investment, anything around that we can help with. The main thing to do is have an initial conversation with us, and I'm going to put a link up at the end. There's no obligation to do anything else, but a 30-minute conversation with me as a starting point can do no harm. That's Evoke. I also wanted to refer to International Leaders UK. Every time we do one of these webinars, people seem to get a huge amount of value from the group discussion. We all know how lonely it can be trying to run our businesses, and even talking to other people in your business, you can feel a little bit lost, especially when everyone is looking up to you to actually go and make the decisions. So having a format where you can interact safely and confidentially with other business owners, with experts and advisors, is super useful. And that's what International Leaders does as part of a program that it has. It's an opportunity to meet regularly with like-minded SME leaders and access knowledge and expertise from the experts that we have. And we have experts that cover disciplines from finance and commercial strategy, leadership and team performance, IP and commercial law, IT strategy, marketing, HR, accounting and tax. Pretty much every head of department you would love to have, most bigger businesses have. We've got it there. It's an opportunity to join and have access to that. So I just wanted to mention that there is help out there. No one should feel lonely or lost. There's help to get, and everything I believe that we have in some way should be affordable to most businesses. So that's what I wanted to just put up there. Next steps, we've done a kind of summary of these 10 points. What I'd encourage people to do is, you know, take those 10 things away, have a think about them over the next couple of weeks. When you've got some downtime, think about them and book in a 30-minute strategy session with me early next year. So in January, put it in the diary now. There's a link to my Calendly now. Go into the Calendly link and book in now a 30-minute session in January. So when you come back from the break, you actually know you've got a thing in the diary to actually talk about your 2021 strategy. And it's 30 minutes with me just to talk through where you're at and where we can potentially help as well. So I'd encourage you to take that up. I'd love to have the opportunity to have a one-to-one with you in that session. There's also a link to a feedback form that's also gone on the chat. There's an opportunity here for you just to tell us what you thought of today. It's great to get your feedback. And also you can put on there if you want to find out any more info about Evoke, International Leaders UK, or book in the time with me. We can get back to you through that as well. Thanks again for joining. Thanks for contributing in the group discussions, and Brett and Liz for sharing what you did. Robert Green, as ever, thanks very much for putting that together. Really appreciate it. We will send out a link to the slides and the recording after this, so you can have a look at it when you're bored over the Christmas period and want to re-watch it. I'm sure you all will be. Yeah, thanks very much. Have a safe and relaxing Christmas and New Year, and hopefully get to speak to as many of you as I can in the new year. Thank you.